something most traders don't want to admit. Every technical strategy, no matter how fancy it is really just trying to answer one simple question. Which levels matter and what happens when the price gets there? Now, traders love complexity. Names, labels, indicators, patterns, the whole circus. Some draw simple support and resistance lines. Some throw rectangles around big candles and call them order blocks. Some call them supply and demand zones. And some want their charts to look like ancient hieroglyphics. Fair value gaps, imbalances, moon phases, chakra alignment, whatever works. Then there's the indicator crowd. Half the time, the indicators need indicators just to explain what they're doing. And the funny part, people rename the same levels 10 different ways and then argue about which one is correct. It's the same level, you just pick a different name for it. So whether you call it order flow, call it liquidity, call it Steve, it still means the same thing. So use whatever language you want. All these decorations are simply different ways of trying to say, hey, this price level might be interesting. So different names, same functions. Now, levels don't matter because we draw them. Levels matter because big fish have already taken actions there. They either defended the level, they got trapped, they committed size. Big players create the levels. We just pretend that we discovered them. We're basically trying to piggyback the people who are actually moving the market. So if they showed interest in a level once, there's a chance they'll show interest again. Now that's what a key level really is, a decision point. Now in reality, we're just trying to hop on the bus after the institutions have already paid for the fuel. Now a lot of traders fall in love with the analysis itself. They stack tools, they build models, they add indicators until the chart looks like it's overheating. Now if your chart needs a fan to cool down, you've probably gone too far. But analysis has one purpose: show you which levels deserve your attention. You don't trade the model, you trade the reaction at the key level of interest. And more tools don't necessarily create more clarity. They just usually bury the only question that matters. Is this level likely to hold, or is it likely to be broken through? Everything else is noise, usually very colorful noise. So trend direction, momentum shifts, volatility conditions, structural extremes, these aren't extra strategies. They're the context, the things that tell you whether a level deserves respect or whether it's just noise. So trading is about forming a reasonable bias before price gets there, and then waiting for the market to confirm it or completely reject that bias. So in its simplest form, that's all it is, nothing more complicated than that. So analysis is just drawing out the map. Execution is driving the car. Now most traders are experts at drawing maps, but absolutely beginners at driving. So beautiful chart, terrible execution. Happens more than you think. Now identifying the level is the first step. The real work happens when price actually reaches it. So does momentum stall? Do buyers defend it? Do sellers hit it aggressively? Does volume kick in on the break? So watching price approach a level is like watching someone decide whether they're gonna knock politely or kick the door in. That's trading. So if you strip away the fancy words, then a strategy is basically saying, I think buyers defend this level, or I think the sellers break straight through it. Now most strategies are just fancy ways of saying, I think this level does something. Then when price approaches, you judge the behavior. If the market supports your bias, you participate. If it doesn't, you adjust. No drama, no emotional damage, just a new level and a new read. And yes, price approaches a level and traders suddenly forget every rule they've ever written. So traders get overwhelmed because they treat every concept in trading like a separate religion. Trading concepts become religions way too fast. And some traders switch trading religions every week depending on who won or lost last week. But at the end of the day, it all comes back to one process. Form a bias, identify a level, trade the behavior around that level. Everything else is decoration. Some decorations cost money, some cost you your sanity. None of them change the core idea. And the cleanest chart often wins, simply because the trader can actually see what is happening. So most traders overcomplicate it because simplicity feels, well, too simple. But simplicity feels too basic until you realize it's the actual thing that works. But the market rewards clarity. So level of interest, bounce, break, that's the whole game. So learn to read the behavior around those levels and you're already ahead of most of the market. So every technical strategy is just a different way to identify key levels of interest. And every trade is a bet on whether the level holds or whether it breaks. What's the one type of level that you trust the most and why? Let me know in the comments, and if you want free access to my Support and Resistance webinar, sign up to the link in the description, and I will see you in the next video.